Hello, everybody, and welcome back to our second episode of Get Real with Mood Digital. Today, we're gonna talk about some hot takes that we've seen on the week, some things happening in the ecosystem, and we just want to have a chat with our co-founders about this. We have again Patrick and Cholo who are joining us in this episode. Uh, and we're gonna just discuss some of the highlights that we've seen and bring an insight on our takes, more their takes on what's been happening. So welcome to the program, guys. Great to have you here. If anybody missed our first program, this is a series that we're going to be doing. We're going to be doing different stuff. We're going to try to keep it fresh. You're always welcome to put some comments to share this so we can get more reach. Last time we managed to get 500 people in our first show, so let's try to double that today. Put some comments, follow us on YouTube, follow us on X, and spread the word because we're here to build something amazing with all of you. So welcome, Cholo, welcome, Patrick. Any quick intros you want to say?
Yeah, maybe just from me first.
GM.
GM to everyone. We had an awesome reception for our first Genesis episode. So thank you guys for the support. As Jose said, we want to keep these fresh. It's going to be a mix of Cholo and I giving our takes on just what's happening in the market as we see it, and then we'll have some external guests coming on as we roll through the series. So excited for the second episode.
Amazing.
Let's get to it.
Okay, let's get to it. We're going to start with a big one. This is really cool news that we've seen. So we've seen that Ripple has tried to buy stablecoin issuer Circle. If anybody doesn't know, Circle is the issuer of USDC. So it's quite a big deal. Let's start with you, Patrick. You used to be on M&A, so this is just down your road. Tell us a little bit about this story.
Yeah, so for those that don't know my background, before we started this venture, I was an M&A professional for close to 15 years, almost a decade within an investment bank, acting as an advisor to companies, but then also, as a company, as a principal, looking on both sides of the trade, whether we were looking to buy other companies and whether we were looking to sell different assets that we own. So to see this type of scale of deal come to crypto it's really awesome. Cholo and I have sort of been following the evolution of just large scale M&A like this in the space for a long time. And the reality of it is there just hasn't been a lot. A lot of that is just because the industry is growing up and companies are getting to a scale where you start to see these type of $1 billion transactions. So something like this is awesome to see. I apologize in advance if I geek out a lot on this because it's a super exciting topic to me. So to the deal at hand. So Ripple Circle. First, a premises. M&A is all about characters and personalities. M&A deals they're very hard to consummate, and they often fall apart for a number of factors that have nothing to do with the offer that's at hand, like the money that's on the table. In banking, we call these social issues. They're super relevant. They're super relevant to this deal. Personally, I can't say that I've never met Jeremy Allaire in person. I've heard him speak in panels a bunch. We know some of the team in Ripple, but of course we don't know any of the background here. It's highly confidential stuff, but we can give our take on what we know of the scenario. So first to the Ripple side, why would they even do this? Ripple has its own stablecoin. It's very early, less than 300 million in market cap today. So essentially, the reason that they'd want to do this is they're super bullish on stablecoins as a product. They see the market and they see this as a way to accelerate their prospects in stablecoins. And as they looked at the landscape, Circle is not the number one player. It's the number two player. The number one's Tether. But the thing that Circle does do is they act in a very compliant manner to U.S. regulations. And this is completely aligned with how sort of Ripple operates. Most of their customer base are sort of TradFi institutions that are looking for institutional grade solutions. So they looked at Circle first. In terms of Ripple's financial situation, they are in a scenario where their own token XRP has quadrupled in price since the U.S. election. They're one of the major beneficiaries of President Trump in the U.S. So they have this war chest from external sources. I see 10 billion. I can't validate that, but let's just assume they have a $10 billion war chest using their tokens as acquisition currency. They've started down this path of building by acquisition. They recently acquired a prime broker called Hidden Road. Side note, shout out to our buddy Justin Chow, who did very well in that trade. Hopefully we're one of the cool kids like you that gets an exit event like that. But for Ripple, basically this has become their playbook. They have these very highly valued tokens. What can they do with it, and what can they go out and buy? So that's where Ripple sits. So they put in an offer for $5 billion. On the other side of the trade, you have Circle, and it's actually interesting for Circle because Circle is in an environment where they have publicly filed for an IPO. So they filed their S1. They're in this scenario, which we call dual track scenarios in TradFi, which basically means that you're considering two different exit events at once. One is a capital market solution, so IPO, go public. The other is a trade sale. And Ripple has now just given them optionality to evaluate both tracks, which in theory is actually a pretty nice situation to be in. But who's the decision maker at Circle? To my point of it's all about characters and personalities. Jeremy Allaire, of course. He has a very professional management team. He has an external board of seven independent directors. So all of these players matter. All of their opinions matter in terms of governance and how decision making happens within Circle. So at face value, $5 billion, the first deal, so it seems like a lot of money, but like how do you evaluate that, like just from an economic, from a valuation perspective, which is the first consideration. So to give some perspective on how the conversations are probably going within the management at the board level at Circle, because of the fact that they've filed for an S1, it means that they have a very, very thought through business plan for not just like how the business looks today. How does the business look today? It's 1.6 billion in revenue, close to 300 million in earnings and EBITDA. But they also have projections of the future of what will the business look like 1 year from now, 2 years from now, 5 years from now, because any decision that they make in exiting today has to be looked at in like, what will the value of the business be in 2 or 3 years? I've gone through the rest one. I've read the things that they publicly state. And what Circle believes is that the market for themselves as a stablecoin provider is the entire monetary supply of the US dollars. To give you a perspective on where stablecoins are today versus the market, it's less than 1 billion of US, or sorry, less than 1% of the total monetary supply in the US. So it may be rhetoric, but what it means is I think that there's huge potential to grow into a massive undertaking, more than like the 20 billion that they have today in TVL. So that has to be put into consideration, right? If you think about it from a multiple perspective, so bankers always talk about, okay, so you're 1.6 billion in sales. So from a multiples perspective, what is like 5 times, or what does 5 billion mean? It means that Ripple has put in an offer which basically pays them 3.5 times for their revenue, which, if you put it in the context of fintech, is super low. Those numbers typically look like 10, 12, 15 times sales multiples for publicly traded fintech companies. So at face value, and this is without me having Bloomberg screens, or I'm not a fintech banker. It's just like how I would look at it from an outside perspective. So that's valuation. So do they think that they're worth more than 5 billion? Probably is my guess. To the social side of it, what would Jeremy Allaire want to do? What would the board want to do? And it gets down to anyone that's being acquired always thinks to like, okay, if this person buys me, are they going to live out the thing that I'm trying to build? And what are they going to do with it? And Circle has always, wanted to build a permissionless, open stablecoin. Is Ripple going to continue that vision? I don't know. I don't know like what they're, what they publicly say about it or what they think behind closed doors. But this is when all the social issues start to come in because, does the Circle team want an exit? Do they think they can build this by themselves and create much more value? Do they think this is the right buyer? I don't have insight into any of that stuff. But all of that being said, if I was Circle, I would think that 5 billion is super light for what I've been building, and I would ask for much more. I've seen rumors that Ripple has increased their price to 10 and in other places 20. That's all X unsubstantiated rumors, so I don't know what's true. But I wouldn't be surprised if that's the way that this goes. Sorry that was a very long-winded answer.
That's a very well answered and a lot of insight in there, a lot of figures. Cholo, do you have any takes on this or anything you would like to add before I move some questions regarding this?
Yeah, it's an interesting question because, like, I guess, like when in banking, both Patrick and I kind of work on opposite ends of kind of the information spectrum, right? So I used to work on the capital market side, and capital markets essentially deals in stuff like this: IPOs, debt issuances. Essentially, when companies want to go out into the public and raise financing. And I guess where I saw the Ripple, this news was interesting, is that essentially Ripple offered right on the dot. I think that 5 billion is the high end, is right on the dot of the valuation that people were talking about, that was being shopped around by the book runners on the Circle IPO to as a target IPO valuation. So for them to kind of walk away from a deal that's certain on the table and take their risk on the market, where, I mean, if you look at it, the IPO market is complete garbage at the moment. I mean, what have been the very large IPOs that have been gotten done and digested in the last couple of years? Just the last couple of months. Not many, like not many, especially of this size. And you kind of think about it too, and I kind of think about it too from a backdrop of the Stablecoin Act in the US is going to come on stream. There's going to be a whole ton of stablecoin issuers going to compete, including potentially stablecoins issued by the big banks themselves. Like, where does that leave Circle? You also have this other kind of rhetoric around de-dollarization. Like, is the US dollar going to be the continued preferred currency of account globally? You're seeing that. You're seeing just random Asian currencies pop off every day, right? Like Taiwan dollar today was up like 8% in a day of low liquidity. Singapore dollar was up 2%, and that's against the US dollar. So to me, like, I guess, like, I'm a bit surprised that they kind of turned down the offer. Maybe it's like the devil's in details, social issues that Patrick mentioned. Also kind of like, I guess maybe the vesting was less attractive, but to me it's like I think the story is not as slam dunk as people would think, that the stable coins are going to consume the world. I think stable coins are going to consume the world. The big question is, are they all going to be US dollar stable coins? And that's I think one that will play out over the next couple of years. And with that kind of backdrop, yeah, I'm not sure walking away is I don't think it was like a no-brainer decision, I guess, in my perspective.
That's some amazing insight. I think it's great to see the M&A view and the IPO view, because both are quite interesting and both have their highlights. Pretending that they said yes, how do you think this would impact trust of people? Do you think USDC would still have the same trust? People would start going back to Tether or start looking for other alternatives, or this would gain more trust for people, saying, okay, Ripple is big, we know that Trump is backing it. Would that give more trust to people on this token if this buyout would have happened?
It's interesting how different players in the market will view this, because what is true is historically the way that Ripple has built their business is aligned from a regulatory and compliance perspective, the way that Circle has built their business, which was always built for the US first. If you look at the evolution of stablecoins, and I'm just talking about Tether versus Circle, essentially what you have is you have a market where the market leader, over 60% market share, Tether, is essentially an ex-US, or it's used for transactions outside of the US. There's a number of issues around, how transparent are they and what's in the reserves. They've been evolving their strategy for sure over the last months and years, and but in general, they've been building in a way that is not saying that we're building for the US now. So that's to say that there are probably people that will, if USDC is acquired by like Ripple, it won't change their behavior. They're just not using Circle to begin with. they were using Tether and they continue using Tether. I think to Cholo's point, what is very interesting in how this all plays out is, what about all the emerging players? At this point, there are so many different stablecoins that are emerging. because everyone sees the traction, everyone sees that the regulatory rails are behind it, and the regulatory rails are going to be different in different geographies of how they're allowed to be built. So everyone wants a piece of the pie. There is a consideration of, so how much of that pie comes away from Circle? So if you have the view that maybe guys, like, we're at the top here, and I didn't even talk about like the business, like where their actual revenues are coming from. I mean, if you dive into their filings, all of their revenue is coming from the interest that they earn on U.S. Treasuries, and we all know where Treasuries are going. So if you take the view that even this revenue model or this business model is toppy, then maybe you are starting to look for other alternatives.
Do you think this is news that we're going to review in many years and say, hey, remember that time? Should we bookkeep this to laugh later on? Or do you think there's going to be many more coming up and this is just going to get lost in the files because there's going to be more of this coming right, left, and center?
Charlie, you want to go first?
I do think that, and it's interesting because I think stablecoins is definitely kind of front and center in a lot of conversations about like the products that were originated with blockchain-enabled features that essentially has gotten very strong product market fit. And while kind of Circle and Tether constitute the large share of like stablecoins out there at the moment, I think that is a big assumption that they will continue to be the biggest moving forward. And I think that, again, because of all these kind of like the dynamics that I mentioned earlier, there is like now, I would say in a certain way, with especially kind of like new platforms coming up that essentially allow you to spin up a stablecoin as a service, I would say that the stablecoin layer, essentially the issuance of the stablecoin becomes more democratized. And what that means is that you're starting to see it now, even in like capital flows of VC fundraise. It's starting to shift more towards stablecoin enabled businesses, whether that's last mile payments in emerging market, whether that's kind of like very neobanks that are using stablecoins as the base layer and not really relying on TradFi infrastructure. There's that kind of signals a shift that because stablecoins are getting more and more commoditized and the market is going to get more competitive, does the value accrue in this whole stack to actually the people who own the user, the consumer? And that's always been what we've seen, and even in fintech. If you own the distribution, if you own the end user, you control a larger part of the value capture. And I think that's going to be where a lot of these M&A is going to start getting interesting, because as we saw in fintech payments, consolidation happens when margins get squeezed. And to Patrick's point, if the main source of revenue is treasuries, then it becomes very much like a race to the bottom, I guess, from a stablecoin issuer standpoint. Yeah,
and just a couple of things to add. First, just in terms of this deal, like I mentioned, like I think that this is like soap opera for anyone that loves like corporate governance and likes to see how these things develop. So I really am eagerly seeing how this thing resolves, and it may take some time, because I think ultimately, if Circle does have financial advisors, so they have JP Morgan and then Citi running their IPO. So I would assume that if it's not those two, it's some other bank that's giving them advice on which of these two alternatives they should evaluate. Or which one they should go with. And so I assume what'll happen is they'll wait till the last moment. They'll try to price their deal. They'll look at the equity markets and say, hey, like, here's what it's going to look like in an IPO, and here's the valuation, and then compare that to whatever offer they have on hand. So I think that's how this one will play out. I told you my bias where I think it goes. So let's see. But more interestingly, I think what happens is everyone in the market sees this. And if anyone that's building a stablecoin right now, they look at Ripple and they say, oh, there's my exit. Ripple, if Ripple doesn't get, even if Ripple gets Circle, and to Cholo's point, what if someone is building other, like a Euro stablecoin or insert, Asian country stablecoin, from a private perspective, that becomes interesting as a market access to Ripple. Is that something that they would want to continue doing, using acquisition as a strategy? I think so. So it opens up alternatives on all sides of the industry in terms of, what's the ultimate exit. As we're founders, and as any founder, of course, you're always building for the long term, but you're also looking at like, what is the end game? And for some people, it's you keep building forever and you build a public company and that's how you grow. For some people, they're looking for trade sales at some point, and that's not just Web3. That's any business. So I think it's interesting insofar as once you start opening Pandora's box into trade sale exits, or very large willing buyers looking at assets, a bunch of other entrepreneurs are going to follow that and say, hey, like how do I achieve that, that end goal?
The one thing else that I would add is, which I think was super interesting, and I think we're in very early innings of really understanding how this filters through in the crypto ecosystem. Like I would think that this is probably the first kind of like major acquisition I've seen where tokens, as in cryptocurrency, was used as a means of payment, as kind of a war chest to actually fund M&A. So like before, we used to think about, oh, what are tokens for? They're just yeah, for funding. They're used for kind of like user acquisition. But actually, if this goes through and if they can pull this off, people can start reevaluating tokens as essentially war chests for funding. If you have, for acquisitions, if you have a liquid enough market, a very strong enough community, a strong holder base, and a very liquid treasury, it's essentially as equal to cash. Does that then change the conversation from VCs around what are tokens going to be used for? Does that change how people use tokens in the future? Because they are essentially another form of cash that you can just like have sit on your treasury and figure out what you want to do with it. You can use it to raise funding. You can use it to raise kind of like dry powder to acquire companies. Then does that also shift the concept around how do you value publicly traded companies with tokens? So if Coinbase come up with a token tomorrow, how would you value that? How does that impact their actual like EV enterprise values? Think about it and try to fire it. It's super interesting. I don't know whether it's going to be kind of like just an additive asset, but it does beg the question, like how do you value these things for companies that start acquiring them and start issuing them alongside stock?
All right. I think we lost you. You're back. We could spend all day talking about this. It's super interesting, and it has so many cool topics we can explore. Before we move to the next topic or next news, I would like to ask, if you were in charge of Circle decision, I already know kind of your positions here. But would you say yes, no? And if you say no, what number you would turn you into a yes? Let's start with you, Patrick.
Yeah, I think, and again, this is from an outside perspective, not knowing what Circle believes that they'll be worth. When I say what they're worth, like what sort of sales and profitability will they have 1 year from now, 2 years from now, 5 years from now? I wouldn't. I think it's a lowball offer. Just looking at comps, I think it's a lowball offer. Depending on how hard you actually want to drive a negotiation, like if all you're doing is maximizing for the best outcome, what you would do is you say no, come back with a better offer, and then just evaluate it. Now there's implications to that because people don't like being pulled around if you're not seriously evaluating it. But that's what I would do. I would say no to 5, come back 15, 20, and then we can talk. That's what I would say without knowing anything about the numbers that they're using internally.
Nice. Cholo?
Yeah, I mean, I would say that any negotiate. I mean, depending also ultimately on your plan. Like, do you want to exit? Do you want to like really go build a public company? Depends really on what the team wants. So some people really want to be just a very kind of like CEO of like a publicly listed company, like Elon Musk is, for example. Some would just be happy to continue to build maybe within the umbrella of a bigger organization. But to Patrick's point, like you don't take the first offer that's on the table. I think that's just the cardinal rule of negotiation. You kind of see where you can push a little bit and optimize the outcome without really showing your intent. So I think it's the first one. Like as Patrick mentioned, there's lots of news around Ripple upping their offer, and I would say it is kind of like the very early innings of what could be a protracted conversation negotiation. And but I guess the other thing is you have to balance it against also the reality of the second alternative. If equity markets continue to go off a cliff, then actually all the leverage transfers to Ripple, because then there's no other option. And that's I think where the markets really come into play in a situation like this. You wait too long and the markets may turn against you. Although it could also turn positive, like IPO markets could like go screaming out the gate after Fed cuts, like after the next Fed rate cut. So it's really kind of like too many moving parts. But of course, like I think time is of the essence. The faster you get to a resolution, the better you can, like, I guess, plan and move on.
Amazing. So we're gonna move to our next topic. Another huge news. This is just a news that I would say top up huge news that we've been building through many years. Like it's about ETFs. We started with Bitcoin, then we got Ethereum, and now we have this. We have Sol, XRP, and Doge, but ETFs likely to be approved by the SEC in the coming months. That's what analysts say. So this is progress that we've seen happening in crypto, and something that we think is gonna keep continuing. What's your take on this news? How do you see this evolving? How do you see, is this great for the crypto? Is this a bad take? Tell me about it.
I'll let Cholo go first because he's a Doge maxi.
Yeah, I was gonna say I am very happy for my bags. I'm holding on. I'm not selling a single Doge. But I would say it's odd, and I don't know actually like how to really feel about this, because like, well, ETH ETFs have been around for like practically like almost like a year, not a year, but almost like oh, sorry, actually, yeah, sorry, almost a year now. And their inflows have just been quite disappointing, I would say, versus Bitcoin ETFs. How much that has kind of like been the most successful ETF in BlackRock's history, like ever. And it shows that ETFs are not the magic pill to get more liquidity into your token. I would say narrative does matter a lot, but I would say it'll be very interesting actually to see how XRP and Sol do versus ETH, because they do have the narrative. Sol has been kind of capturing that the whole institutional, one of the kind of like, well, sorry, one of the coins in the top of any conversation around institutional adoption in the US. XRP, of course, is a very much a strong US bellwether from a token standpoint. It'll be interesting to see like how their take up rate goes against, say, ETH, because ETH is kind of less anchored to one geography or the other, and I think that will also kind of like really inform how crypto founders approach this market. Like, is an ETF kind of like the next big step you want to get to after you become like a top 10 market cap coin, or this it also kind of like how does the ETF space evolve as well? Like, I don't think that the US market wants to have 20 different ETFs for just each of the top 20 coins. Does that consolidate into like DeFi ETFs, for example? Does that consolidate into layer 1, layer 2s? It'll be interesting to see how this all plays out.
Yeah, I think from my perspective, first, institutional adoption, I do think that institutional adoption is good. And I think that particularly with this stuff coming out of the US, the parallel track to that is you see the regulatory system opening up, different applications of crypto. In general, the US regulator has started to determine that there are certain categories of products that don't necessarily fall under the security categorization, which is a net positive, because there are different ways that you can build in the space and not automatically default to must be KYC, all the things that are required in a security offering. And the reason I think it's positive is because to some degree, as much as we talk about a lot, we sit in Asia, and the regulatory regimes in Asia generally have been very forward thinking, generally want to be leaders in digital assets. But even Hong Kong, for example, Hong Kong followed the US insofar as the BTF or the Bitcoin ETF. The US came first, and then Hong Kong followed 3 months later. Like they were still looking to the US regulator in terms of how they should evolve their own local regulations. So I would say globally, it's an important progress in general for the industry to take in more capital inflows. What's interesting to me, and I'm not sure actually, is the degree to which the ETF product actually stops new users from adapting crypto, because they don't always come into crypto. You can buy it off chain. You buy it through the ETF in your BlackRock account, Fidelity account, whatever it is, but then you don't use DeFi, right? So you're not actually onboarding new users to crypto, which is what we're all trying to do here. So whereas I think it's a good signaling at the top level, I still think that there's the requirement for a lot of different types of innovations, which are driven from the grassroots up, DeFi first, building on this side of the ledger to onboard normies. I think that ETFs don't really solve that bill.
Yeah, it's an odd thing, because I think, like, for example, I guess like just the very very relevant comp to that in the kind of physical world would be like oil or gold ETFs. Yeah. So you have oil and gold ETFs where you can get exposure to the asset class underlying, but they're basically futures-based ETFs. What that means is that unlike, say, the spot Bitcoin ETFs in the US, they don't actually hold the physical gold or physical oil, and they just trade off of the price movements. And I think that's probably, to my mind, that's probably the better or the right kind of like the right structure for things like, I don't know, like layer one native tokens that you don't really need to hold them in your like custody account to benefit from their price movements. And like you don't see kind of like a huge amount of like demand for like physical oil ETFs, right? Because I think that just doesn't make any sense. Like I don't know why, just because it's digital, the mindset has shifted. I think futures based ETFs for a lot of these probably are enough for people to get exposure on. And to be honest, actually makes TradFi a lot more money. So I actually don't see this experiment playing out super well over the long term, because if there's not enough volume, then these things will just get shut down by the ETF managers as well, because it just doesn't make sense for them to take on all the overhead to trade like essentially a micro cap ETF.
But hey, if linking this back to the first story, if all the capital inflows keep going into the XRP ETF, then bigger war chests, and maybe they have more money to fund their acquisitions.
And moving to the point, do you think without entering DeFi, without entering to the crypto space, people feel safer going into ETF through their broker? Would that be a good reason, even though they're not onboarded to the space? That still makes people interested, but on a safe way. I think safety is something that a lot of investors would be looking here, and these ETFs would remove that scam net that sometimes people who are outside crypto would label some of the projects. Would that be the case here?
I think you're absolutely right. I think that packaging something in a very consumer, like a normie friendly way, through channels which they already have access through big names that are validated, helps, at least the first step. Let's explore Bitcoin. In this case, let's explore more Solana and what it is, and let's explore Ripple. And hey, there's this meme coin called Doge. Let's go figure out what that is, right? So education has always been the first step in this industry. And so I think that is, to your point, I think that's a positive. But I also, at the same time, think that it's incumbent on all of us as builders in Web3 to continue to build things that make it safe and make it such that, you know, people can trust the industry. I mean, it is the case that there's been so many scams and people have been burned so many times. So you need sort of that first step for anyone to feel safe, and it could be that this is it.
Cholo, you mentioned futures ETF. Don't you think people would be a bit scared to trade on such a volatile market as altcoins, futures on ETFs? Like if we start seeing more and more altcoins coming here, we know that they're so unpredictable. Trading futures, yeah, it would bring a lot more margin and money to the traders, but also a lot of risk. Do you think that should be the way moving forward?
It's an interesting question, and this is one that's been, I think this is even a conversation that has been kind of like played out in TradFi spaces. So I think what's been increasingly becoming a big risk actually in both TradFi and DeFi is a lot of like concentration is ending up at the clearinghouses. I guess in the crypto like world, those clearinghouses would be centralized exchanges, Binance, Coinbase, the large ones. They're the ones essentially like crossing orders. But I mean, up until this point, they haven't been very like upfront around their books in terms of net positioning. And you see that in TradFi now actually, where a lot of clearinghouses, because they don't take on risk and they don't price risk as properly as say like a prime broker back in the days, you see these flash crashes or flash moves. We saw that in the treasuries market at the inception of trade war, where 10-year treasuries just went like ballistic overnight, and that's increasingly becoming a market risk actually. So yes, in that sense, if you kind of like look through the layers, less intermediaries with a spot ETF is better, because there is an implicit kind of like belief that what you hold is essentially what is in the underlying. Futures ETFs, because there's financial engineering involved that could disappear if say the order books explode or implode because of some large CX, kind of like biting the dust on a large like levered long position. So it is safer in that sense. And I guess to your point, like with altcoins, it probably is better to like not hold Doge in a futures based ETF and just hold it in a normal ETF. So yeah, it comes with, I guess, efficiency and like ease of scaling up.
Nice. We are already half an hour into our program. We have one more news. We're gonna run through it. Maybe we're not gonna go into so much detail because we have a special section for later on, which is rapid fire questions. Big success from our first episode. So we're just gonna jump into the next piece of news. So Ethena Labs launched a RWA-focused blockchain, Converge, in Q2. This is a big thing for RWA. Do you think having a specific blockchain would be what's needed? What the way forward?
Yeah, maybe I can start with this one. And it's actually interesting. This is a question that we're starting to get a lot, even just in panels. And we're seeing this trend across. So Athena is one that recently launched their new product, Converge. But across the sector, Ondo, Plume, a number of others have it. Like RWA players that were playing somewhere in the ecosystem has decided that they wanted to go and build their blockchain. So and different strokes for different players. I was listening to Athena and Securitize talk about their offering. It's actually a layer 2 built on ARB. But Ondo and Plume are looking at layer 1s. I think what this is showing is that the market, or when I say the market, it's more the institutional customer base is signaling that they are seeking technology which solely serves their needs. So the solutions that are out there today, whether you're talking about Ethereum mainnet, whether you're talking about Solana, other L1s, they're almost saying, go trade your meme coins, go play around in DeFi, maybe DeFi. I mean, there's some intersection in what these guys are doing, but let's just say like do all of your fun stuff, like do all your meme coins, do all your GameFi, all that stuff on different chains. But when it comes to institutional grade applications, we need a different solution. It would appear to me, given the number of very large and reputable players that are making this pivot, that's the loud and clear message that they're getting from their institutional customer base. And really what it comes down to is simplistically what banks and institutions care about. The thing that they cannot take any risk on is anti-money laundering, AML, and know your customer. What if the person on the other side of your trade is in a sanctioned country? In the US, that's North Korea, Russia, whatever your jurisdiction is. So I think it's interesting that so many different players are trying to build the different rails. I generally feel that blockchain innovation is important, and there's still work to be done. We've made a choice with the partner that we're going with in Monad in terms of just the innovation on blockchains itself. But the question becomes, how much longer term does it matter what the rails are versus the app layer? So this is the basic like tech question, right? Like how much does the infrastructure layer matter versus the app layer? So I think that it's showing the fact that there's a need for differentiated infrastructure in the space insofar as it relates to RWAs, tokenization, stablecoins, any payments, remittances, movements of large institutional type money. Where this plays out it'll be interesting to see. Do I think that we need like 10 RWA blockchains? No. There's probably going to be winners, but at this point, it's interesting to see that a lot of people are going down that route.
I always I guess there is a focus right now on kind of like infrastructure, like layer 1s, and I think that also is informed kind of like where funding has been navigating to. I think if you look at some of the most best funded projects over the last kind of 12-18 months, it's been primarily layer 1s, and there's a reason for that, because of course that your TAM is much larger as a layer 1. You have essentially a especially if you're a general purpose chain, there's a huge amount of kind of like white space which you can kind of like own and take over. But what I would also say is that from an app standpoint, from an app layer standpoint, there is increasingly a commoditization of all these kind of like blockchains. At the end of the day, it really depends on what tech stack your customers are comfortable with. So I guess the big question for any RWA focused chain is how do you kind of like slot into those conversations that are already being had by, for example, Avalanche with some of the big TradFi institutions. I think Polygon has done a number of POCs with like governments and official institutions. Do like, and just coming from that background, knowing how these things move, it's virtually impossible to course correct something that's already been down one track. So as more and more of these come out, like they're gonna start like bumping elbows against each other, and it does become kind of like there is a version of this future where everything's kind of disjointed, where some assets live on one chain, some assets live on another chain. They don't really talk. So you kind of like you lose the whole purpose of DeFi, which is composability and free liquidity, because you're kind of like setting up all these like permission wall gardens. Some chains will have permission access, some chains will have permission subnets, some chains will have like wouldn't be able to bridge because of like KYC issues. Like, is that really the DeFi that we envision to build? I think that's kind of like where the kind of like the bearish case of this ends up. But of course, the bullish case is that everyone kind of works together and all these RWA talk to each other. But increasingly, I'm not sure that that's going to be where we get to in the intermediate or medium term.
Yeah, and I want to like build on that too, because I think this is probably something. Yeah, this is something that Chil and I ended up talking about when we were in Thailand in our last community event, because it's very important in terms of intent, right? So to the degree that you have characters such as Athena, Securitize, Ondo, Plume that are building in a manner that preserves the values of DeFi, we're all for that. I mean, that's a net positive. At the end of the day, we're all here to advance financial products, the system, and build in a way that uses the superpowers of blockchains. The opposite end of the spectrum is there's been so many different experiments, and we came from the investment banks that are working on different type of walled gardens that use blockchain as a technology but do not utilize any of the ethos of DeFi, and it's a way to serve their existing customer base. So that's the other end of the spectrum, which we hope that's not, we're not building that way. So we hope that we hope that the other side wins. So to the degree that all these guys are building in a way that the premise of DeFi and Web3 perpetuates, we're all for that.
Absolutely. I don't think. Well, you mentioned institutional would require like anti-money laundering and KYC. Maybe we don't want to see things like like Retina with WorldCoin, that you would have your wallet and they would know exactly who you are and where you're standing. That would not be good for anyone, I think. But I think there is a strike balance that all these blockchains have to benefit from the DeFi that is being built, right?
I mean, if you talk to banks, like the biggest, I mean, just like one last point, like if you talk to banks and like really where they see the nearest near-term opportunity is for like blockchain stuff is essentially enabling trading of Bitcoin, Ethereum, and majors on their platforms so that people can trade on their kind of like brokerage account, never having to leave, and it's payments. The tokenization is just a string of like POCs, POCs and kind of like blueprints, but if you ask, like honestly, if you ask some of them, like my cap markets practitioners, they're like, yeah, but who wants this? It's like, but trading coins on your bank account or your brokerage account, everyone wants that. Payments more efficient and skipping SWIFT for kind of like internal or like within, for example, like a bank's ecosystem, sending money from one country to the other, using a stable coin as a ramp for that has a huge product market fit. The tokenization thing is still, I think, very nascent.
That's why we left the banks.
Even used for M&A, as we were discussing earlier on. Okay, so we're going to move to our final part. This is rapid questions. If you're listening to us, guys, remember, follow us on YouTube. Press the share button. We just reached 200 viewers, which is fantastic. 201, which is fantastic. Welcome to all of you who are watching. Big shout out to our community who's always supportive and been watching. You guys have selected some of these questions. You create these questions for the rapid session. So we're just going to start with whoever wants to answer. Just go for it. Both of you are going to give me your answers, and then we move to the next one. They're short, they're fun, so let's get on with it. So if Mute Digital were an animal, what animal do you think it would be?
Oh, that's
A
easy.
bull.
I'm gonna go.
That's
Yeah.
our mascot. A
Now I
bull.
choose a different one.
Please
Do I have
choose
to
a
choose a
different
different
one.
one? I have to
Yeah.
choose a different one. Oh man, I don't know. Like,
Can we use a monomal? I think it would
yeah.
be a frog.
Okay. The first one that came to mind was like eagle, but I don't know why. So I don't need to
Eagle.
explain it, right?
No, you don't have to.
I was gonna say a panda, but I don't think that's Mu Digital. I think it's just an animal I like. No.
I'm happy none of you said a bear, so that's great. Worst investment you have ever made?
Oh man, there's a long list of meme coins in my wallet that like I have hidden from MetaMask View. And so I think just anything like meme related, probably the worst. Sorry, the second, very very close second is Axie Infinity. No, I'm kidding. I love the Axie family.
I have a funny story, and it was a meme coin. It was the first dog coin on Solana in the last cycle. It was called Samoy, Samo, like off of Samoya the dog. So the story behind that was I said that the reason I'm buying this meme coin is because I want to fund an actual Samoy. Like I want the dog. The investment didn't work out, but I still ended up buying the dog. So so I think it went negative in both ways.
That's a great story. How's the dog now?
Dog's doing well. Investment not so much.
Uh,
Investment zero.
Very good. So, what do you think is the most underrated thing in crypto right now?
Hmm.
The most underrated thing in crypto. I wouldn't say RWA. That's like a cop out. But let me think. Um. Hmm. You want to go
It's hard
first,
for
Pat?
me. Yeah, it's hard for me to call out a specific protocol, but any alt token or any project that actually has revenues and their token is not reflecting that. I think it's just like there's tremendous value in the protocols that have a revenue model and it's not being reflected in the token because all that anyone's buying right now is Bitcoin.
Good.
Yeah.
What?
Yeah, I would say like I would say, and I'm not, this is not because of my Doge bags, but I think proof of work is a very underrated kind of like schematic by which consensus is based on. Like people assume that proof of stake is superior, but actually proof of work is if we kind of like go with the assumption that clean energy is going to take over, proof of work actually is a better resistant, censorship resistant, and a better kind of like consensus mechanism overall versus proof of stake.
Interesting. Nice.
Hot take.
Hmm.
What's your
Also,
favorite
Doge is
mon?
proof of work.
Okay.
Sorry, I say Doge is proof of work. So
Favorite mana project?
it's
Oh,
not us, I guess.
yeah.
Yeah.
We have a lot of friends, so this is. I will say so shout out to how do I do this? The Clobber team, who I'm wearing their merch right now. Emerging team, and they also bribed me. Not only did they give me this hat, they gave me a bottle of whiskey called Keone when we were in Seoul. So this answer is because you bribed me. Thank you.
Nice.
I will answer not a DeFi project so that I'm neutral, but it's NBA playoffs and rare bet sports because you can bet on it. So like I mean it's testnet, but I'm saying just like because I like to bet on sports, so I would pick that one because they have a pretty good and cool UX.
They also have dope merch. Yeah, so if you guys can give us any merch, we'd appreciate that.
Nice. Uh, Another CEO or founder that you admire?
Hmm.
I know there's few,
Like not monad
just
specific, right?
not money
Anywhere. Yeah.
specific. Somebody that inspires you.
Web3 or no?
Open.
Loaded question.
CEO or person you admire?
Let's say
Okay,
inspires you.
Yeah, I was thinking a lot of things. What I'll go with is David Solomon. And for those of you that don't know, it's the CEO of Goldman Sachs. The reason why I'm saying that is because not only is he the CEO of Goldman Sachs, he's also a DJ on the side. So I super respect the dual life.
Nice.
I don't know. I can't name anyone. I'm just gonna say Warren Buffett because he's ending his tenure as CEO, and that's when you say CEO, that's the most recent one I can remember. So I'm gonna go with that one.
All right. What and how much influence do you think Bitcoin's going to have on Monad ecosystem?
That's interesting.
Interesting. Bitcoin has always been that thing that it just attracts liquidity because Bitcoin is just something that if you get I mean even on Aave the one of the biggest kind of pools is essentially wrapped BTC. So I think that integrating Bitcoin into the Monad ecosystem will only bring it's only positive because it brings liquidity, it brings eyeballs, brings attention, and yeah, it just brings the Bitcoin maxis. Like they're always kind of like a fun bunch, although sometimes a bit aggressive.
Yeah, no, I was gonna say too. We have dear friends that are part of the Bitcoin Renaissance, and we've been in a bunch of the events, sort of, on the conference circuit. I think that it would bring a completely different element to the Monad ecosystem. I think it'd be super interesting, and I think there's a lot of ways that also us as a protocol can work with sort of the foundations that they're building around decentralized products. So bring it on, Bitcoin Renaissance X Monad. Let's go.
Okay. We have a very serious one. Who's going to win 100 men against a gorilla?
I think it's 100 men. There's a lot of them, and I don't think a gorilla can take on 100 men. But I don't know. Like, hopefully, someone tries it on.
Yeah, I'm pretty sure there's movies about this, right? Like Planet of the Apes, but this is the reverse. I would go with the ingenuity of Homo sapiens over one gorilla.
Very good. Mankind winning. Nice. Are you a holder, degen, trader, or something different?
I kind of do everything, to be honest. Like I obviously I try not to sell much of my Bitcoin, although I've lost a few from like levered trading, but that I try not to like sell my Bitcoin, but I also kind of, I do like a lot of like meme coin trading and also a lot of DeFi. So yeah, kind of a bit of everything actually.
Yeah, I'm similar. I grew up in an environment where I literally took value investing classes when I was in business. I went to school in New York, and I literally took value. So Warren Buffett is like, I have every single one of his books. I've read all of those 800-page books. So that's how I grew up. The longer that I played around in DeFi, of course, you become a degen and you start doing 100x levered trades. And like I told you, the meme coin story, I've spent way too much money on meme coins. So, but I think it's important. It's important to do that because you can't know what to create and you can't know how to make a better solution for market if you're not playing around in the market. So I think both Cholo and I are like that. We grew up in traditional environments, but we saw the light and now we're trying to create something better.
Amazing. Guys, this has been super insight. I really love your takes on the news, learned a lot. I think you have brought a fresh view on what we've been talking about and a very insightful with a lot of base of what you've been saying. So thank you for that. I thank you so much. I also want to thank all our watchers. We're about to conclude the program and we have 220, which is great. We did not reach double our target, but it's great to have 220 watchers. And want to thank our fantastic community for being supporting us throughout. I do not have anything else from my side, but if you want to say anything, Patrick or Cholo, just the floor is yours.
No, I think like we said, we want to keep bringing fresh content to you guys. So to the degree that you've other topics, things you want to talk about, hit us up on our Discord. Otherwise, always super supportive or appreciative of support. Until next time, Mew.
Gmu.
Jimmy, everyone. Bye-bye.